Am I not seeing it? So yeah, I gave you the link to the inflation report out of the Bank of England, but having only slept a couple of hours, for some reason I can't find the link to the live stream. I have it up there, but that's set up not to have audio. So I was trying to get you audio. Maybe on YouTube. Sorry, I'm just slow. Thank you. No, of course I don't want it. Not, hang on. One thing I can do is play the happy music, so let's do that while I can. He just said my name. Did you hear it? Oh wait, you don't hear what I hear. Hang on. By the way, Challenger report came out. 46,000. Can you hear him? Okay, let's try plan C. My new headset blocks it. I hate this new headset. It's too good. So it seems like it won't do live, right? Is it working for you? No kidding. All right, so it's streaming for you. Wow, it's not streaming for me, but I have it somewhere else. All right. Well, maybe just click the link I provided you, and we can watch it together. All right, so hang on. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. And just to get you up to speed, the FOMC said nothing. Bank of England so far has said nothing. Uh oh, here it comes. Here it comes. You guys following along? I need some coffee. Hang on. I'm sorry, I'm so exhausted today. Seeing how it touched 44 and dropped back below the central? Also, you notice how I teach you how to trade? The cross down, back into the cross, and you're gone. There's a chart in my book that looks almost exactly like this. This is the old man easing in the hot bath idea. So you notice they raised their inflation or their GDP projection from 1.4 to 2.0. But that just might be the cheap pound. Dang, that stimulus is working. Do that again, eh? Don't you NPC me. Two point oh. Whoa, whoa. Where's she from Manchester? Huh? She's from Manchester? Anybody know? Whoa. She's married to the transporter. Look at up to the neutral zone, back down into the trend. Remember talking about I think it was this one we talked about the potential for the double bottom. So how do you play a double bottom? Well, that's a hammock is a hammock, right? How do you trade a double bottom? Higher high, higher low. That's a 1-2-3. How do you play a double bottom? 2-3 is the double bottom with 1-2-3. How do you play a double bottom? Wait 22 or 23 candles for 9 levels of confirmation. Is that how you do it? What do you think of that? Yeah, Ben. Everett says you can wait for a signal to see if it's time to buy. Yeah. Well, you should anticipate it. So we did talk about this yesterday. Hang on, I got to mute the stupid press conference. All right. So if not this yen pair, one of the yen pairs, to me it never really matters. We talked about the 55 being in control. Okay. And I asked, what does that predict? We were up here, right? People said double bottom, right? It might not have been this one, but it's the same idea, right? So how do you play a double bottom? Well, you know where it is in advance, right? If you knew it yesterday and we're like, hey man, this leads to a potential double bottom. So where's the double bottom? You already know, right? Yeah, okay, M1 or whatever, or 12 or something. But the thing is, it's only a leading indicator if you have a trade plan, right? It's only a leading indicator if you're thinking ahead, right? So anyways, so you can see that somebody has identified that as a potential double bottom. Could be a rabbit, could be. I was born to trade with you. Magnificent, magnificent. All right. Uh-oh. Uh-oh. Oh, man, I jumped in the shower for you guys. I'm like, I'm drinking energy drinks in the shower, right? Listening to the Bank of England announcement. I'm drinking coffee, and I don't generally, I don't, not even generally, I don't do drugs, so I don't know. I can't, I'm not going to do cocaine or speed. So I only got energy drinks and coffee, and my loyalty to you. My loyalty to you gets me out of bed. Actually, I had bourbon yesterday. I did have nicotine yesterday, and I did have caffeine. My coffee mug, I don't know if you guys can tell. My coffee mug, look at it compared to the size of my hand. It holds like a liter of coffee, or certainly more than a half a liter. Yeah, so that's a mug. That's a man's mug. A pint. I did. So, anyways, I don't know. They're babbling on about something. Nobody cares. They're not going to do anything. All right, fine. Okay. So now we have to prepare. Um, we knew the yens would be strong in the beginning of January. We knew there'd be a false rally somewhere. And then uh, very likely a new wave of yen strength, right? And then what? So we sometimes you need to sit down with a compass. Where are we in that process, right? And if all of that's true, right? So here's the yen strength on what are we looking at? CAD yen. All right, CAD yen. So I said here to look to be prepared. The Japanese yen to get strong, not based on technical analysis, not based on fundamental analysis of economic data, but on fundamental analysis of financial flows. Based on that analysis, the yen will get strong, right? I was pretty adamant about it too, right? I'm like, it's just going to happen. I know it doesn't make sense to, right? I know it doesn't make sense, but it's going to happen. And boom. All right. So, anyways, it happened. But to further that conversation, we've discussed that somewhere around the third week of January, maybe a little bit later, but starting in that time frame, there should be a false rally. Ken, I guess you got to watch the 1 hour interview for me to. I don't want to answer it again. I'm too tired, bro. I'm too old, Kenny. Put in the time, man. Right? I don't have a link. If anybody has a link to the interview on FX Street, that'd be sweet. It's just, I'm sorry, Ken. I'm just tired. I'm sorry, man. Don't hate me. All right. So, anyways, somewhere, right, when we were up here, the plan was down, and somewhere starting in the time frame of the third week, but often it's a little later, like now, like the first week of February. But you don't know. But starting in that time period, and you'll notice that it is right that period that there's some sort of rally. But what I've told you in the past is that it doesn't last very long. Yeah, there's Ryan. Can't start the R, man. He's a wizard, that Gandalf. He's great. Yeah. So, anyways, uh, all of this is true, is it right? That somehow February ish is a false rally, then we end up buying yen back sort of the March period. Yeah, no. All right. Do you how well, I can't answer it with another yes question, but if you how about this? If it seems like I'm fitting it, squeezing old analysis into new conditions, type in squeeze. If it seems like I'm sort of faking it to look good, whatever. Okay, no squeezes, no yeses on the last one. So not a chance, China. No bacon here. All right. Well, all right. So everyone's quiet. So you guys are more quiet than I am. But anyways, so what I'm trying to get at is, you know, I assume or I have a plan that the yens are going to fall here. I have a plan that the yens are going to go up somewhere around here, right? And then at some point it's supposed to come back, but I don't know exactly when. Yeah, Ben, I probably babbled it out like a monkey head. I'm tired. I'm babbling. I'm sorry. Um, but I can anticipate it's going to happen, but I don't know when, right? I was pretty clear. I said, I don't know if it's going to happen just before Christmas, just before New Year, right? But I said by the Monday after non-farm payrolls in January, I'm sure I'm cornering the market on Japanese yen. Hang on, hang on, hang on. Sorry, man. Fell asleep around 2:30 a.m. Missed your messages by 15 minutes or so. Talk in an hour? Cool. All right. So you don't really know when, and you have to make judgments along the way. Do you guys remember me really diving into this right in here? I mean, on the Monday of this drop, and I'm like, this is going to be a serious problem. We really have to decide if that is the beginning of our false rally. We need to decide if we should stop selling. How many people remember that? I think I clearly articulated that question, right? Right? Because again, if you don't remember it, then it never happened, and if it didn't happen, you didn't learn, and if you didn't learn, you don't know these things. So I need the feedback, right? Like we're heavily short. We just made a ton of pips on a gap open, hundreds of pips on the pound yen, hundreds of pips. It was like 250 pip gap, right? And I'm like, uh-oh, that could be the end. They're like, Wayne, you're heavily long yen. You just made 250 pips in the snap of your fingers. We've been short this for weeks. Uh-huh. It's probably over. Right? Yeah, it's probably over. What do you mean it's probably over? You remember some other people were like, they're like, can't I sell it here? Can't I sell it here? And I'm like, yeah, you probably could, but I wouldn't. Yeah, it's probably over. It's probably over. Um, and but you don't know, right? That's the thing. You don't know. So you have to say, this time is different for whatever reason, right? Yes, you do have to adapt. Absolutely, right? So, but at least I'm open and honest when things change and I don't know. And I hope that I think the way I phrased it is I asked you I said I hope it doesn't make me a bad coach to say, you know, I believe it's going to fall here, or let's go back to the arrows. I believe it's going to fall here. 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 Uh-oh, I don't know anything anymore. I don't know. I just don't know. Right? Do you guys remember that point where I'm just like, I don't know. I don't know. Decision making time. I don't know. It might be over. It might not be, but I don't know. I'm not certain anymore. It may be over. And if I have a big question mark, then many other market participants are going to have question marks. And an amateur is still just bold, right? Boom, 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 buy more yen, buy more yen. I'm like, look, you could give it all back. All the money you just made over the last 4 weeks of buying yen, you might give it back now, right? And the big clue here, and it wasn't just this pair, several of the pairs opened the week here. And what have I taught you to do using pivot point theory? That's a buy. Oh, ooh, ooh, right? That's a buy, right? It's a counter trend trade. I don't have very many. I only have like one, maybe two counter trend trade setups. That's one of them. And we're talking about this on Monday, and it just gapped down 250 pips on the pound yen. I'm like, yep, that's going to get people out. And if it gets people out, the downtrend may be over. And if the downtrend's over, someone might buy it. And with the Trump election and all this nonsense that, a man becomes president of the United States and the economy suddenly is fixed the same day. I mean, it's nonsense, right? But I'm like, well, but it could create a rally, and the stock market wants to break 20,000. I mean, like, I don't know. I don't know. How many times do you get a completely new administration in the White House? Oh, every 8 years or so, right? So like, so this is, I don't know. But it's good to know when you should know. It's good to know the. It's good to know when you should not know and to be aware of that, right? Nick says the financial markets have been acting very strangely in the past year. See, I don't think, I don't feel it that way. Let's put it that way. It's the unknown unknowns, right, Charles? So, um, yeah, I found the financial markets have been actually pretty straightforward. But anyways, so now we're in this situation, right? This is the other counter trend trade, right? This is the one on the left is something I have taught you dozens of times, maybe hundreds of times, depending on how long you've been on my team. So you know that to be a truism, and you know this one to be a truism for also a counter trend trade, right? This one, trade back to the central. This one, trade back to the central as a minimum, right? So you don't even need me to tell you. You know it's true. And you also know, as we covered on Monday, you cannot buy it here. And you also know this is a counter trend trade short. This area gets bulls out of the market. That's why it is a short on profit taking, right? So that's just the mechanism of the market. And if you did short here, if you did do this, your first target is here, but your ultimate target is really, down here or lower. Okay. I've identified this gray zone as support. Okay. I did it on Monday. Tuesday's bottom is my support. Okay. So decision making, if you're a bull, what you want to look for is something like this, right? And if you're a bear, you're shorting pullbacks, right? Right? I just want to make sure everyone is totally clearly on board. Yes, good. Clear as mud. 100 cement. Great. Only love can tear us apart. What happened to the bear move? Looks like we lost part of our analysis. You can see the target here. Somehow I deleted it. Okay, M3. Okay. Oh, I see what we were talking about. All right, so I said, look, going back in time, you can see we have a roll reversal, and it's also weekly support 1. So if Kiwi Yen finds support at support 1 because it's a long roll reversal, and the bottom is S1 this week, the actual target is R1. That's all that's suggesting. If your trade if you're swing trading, again, that's Monday's open. I've taught you, let's do it this way. I've taught you that if you trade that, your target's down here. And look, there's all kinds of ways you could sell it. Down into the 21, down into the, well, 21.55, whatever. Down, right? Or down through the pivot, right? Back to the pivot. Any one of these. It could be a sell here, it could be a sell here, it could be a sell here. Okay? You see once it made the lower low, you mark the roll reversal on this time frame, which might have, instead of an hourly chart, it might be a 15-minute chart, a 5-minute chart. But you know that's your sell zone, right? And you can see now, unfortunately, we're squeezed into a range. You would rather be breaking to the downside, but it could be FOMC, it could be BOE, it could be NFB, any pick an acronym, any acronym, right? Or it might just be because you're on a 5-minute chart, but the world's looking at it this way and says, oh, well, this is important. And I've clearly marked it, right? And it smells like we're trying to get to the 200 EMA. And in that case, we might want to play it like a double top and then a head and shoulders. So you see how we extend down, okay? Let's say it actually doesn't go to the M1 today or this week. We just think outside the. Well, we'll play it like a 200 that wants to tickle the M1. I get it. Okay. So then we may even head back up next week into another false rally, and then it brings us down to the next level. You still have to play this bottom. So what do you want to call it? 80? Okay. And it's not, and then it could go all the way back up. But most likely, you see this top at 84, this bottom at 80. Don't hate me, but what if we were there 6 months? Well, you might as well buy it low and hold it and collect the carry. Okay. I was born to sing. Yeah, but you better buy it at the bottom, though, Mike, right? Jam a stop and just ignore it. I have suggested before that people open up an account at TradersWay, and all you do is carry trades. Maybe once or twice a week, you put in working orders to buy something. Because remember, a carry you can't sell, so you want to buy a yen pair. All you do is identify support. Put in maybe a working order with a 100 pip stop or 150 pip stop, whatever. And if you get hit, you're in. And if you get knocked out, you get knocked out. But you set these working orders over the weekend, and you never actually watch them. You're either in or you're not. You don't know. You get knocked out for a loss or you don't know, but you're not watching. Just once a week on Saturday, you open up your account. You're like, oh, yeah, made another 500 pips this week. So down here it's support. I might try to get into another one. You put another working order sitting on a great support, and you're like, well, if the pound yen falls another 300 pips this week, I'll buy it off the M2, or I'll buy it off the off the pivot profit zone. So I'll buy it on M1 or I'll buy it on S2. or I'll buy that counter trend trade I see setting up. And then you just shut your account on, and you never log into that MT4 account for anything else. And the trades that you get in, you assume that you may never actually take profit. No, I would not, Brandon. No, I would never. Brandon says, would I ever buy CAD yen but sell Kiwi yen? No, no. No. I don't do that. So I see myself primarily, first and foremost, right, as a trend trader. And the things I trend are either dollar or yen. I spent 1 year trending Swiss franc, and like half of the trades I made that year were either like pound Swissy or Aussie Swissy. It was great. Like, oh my God, it went from like 2% of my trades to suddenly like 50% of my trades. Like, whoa! But the market gave that to me. But generally, right, the sum the sum of a decade or more than a decade, right? The sum of more than a decade is that's a good sum. The sum of more than a decade is, yens, dollars. Yeah, DJ says out of sight, out of mind can be very profitable and stress free. That is the whole idea. See, I think some of you are pretty decent technical analysts, but you don't make any money. Why is it? Well, you're not a very good trader. You're a great analyst, but you're not a good trader. And generally, what that means is you screw up your good trades. You jam your stops too quickly, or your stops are too close, that kind of stuff. Or you're so happy with your 25 pip profit that you miss the 250 pip move that you were already in, you know. And then of course the big losses, you know, that'll do it too, right? So, but your technical analysis is impeccable. So the out of power, out of sight, out of mind, right, kind of idea is if you do technical analysis and you give yourself a big stop, like 150 pips, and you only swing or more position, right, and you only buy at support, and you have a solid point of view. What are you doing with the yens? I want to buy the yens, right? Great. That would be a portfolio that's focused on income, not just wealth. Income-based portfolio, right? Now, the time of year for such a portfolio is actually very dangerous. Okay. I mean, let's get all the way back, even though we've been talking about it every day for a month. Near the end of December, you were supposed to prepare for yens getting ripper strong. And that should last, let's say, like I said, third week of January, but let's just say January. January yens are strong. February, sorry, I should say it that way. The yen can weak, which means yen pairs up. But that would be a false rally, and that would be followed by more yens in March, right? That doesn't sound like holding forever, right? DJ wants to know if I hedge. I generally don't. No. Okay. A hedge fund would have a client that says, "All right, I just did business with uh, Brazil, and over the next 3 years, we got $1 billion worth of transactions happening in Brazilian real or reais." Okay? So we're exposed to currency exchange fluctuations, right? In the exchange rate of the US dollar, because the dollar could get strong or weak. One that may be advantageous, it may be bad. It may be destructive to profits. Same thing, the Brazilian currency can go up and down, fluctuate in value. Sometimes that's good for you, sometimes that's bad. But you need to know, based on today, you're signing an agreement with the Brazilian company. Money will exchange hands over the next few years, and everyone agrees on today's price. Well, today's price will not be tomorrow's price. You know that, even if it's only a fraction of a penny. But 3 years from now, OMG, right? So now you need to lock in today's price over the course of the agreement, which could be years. How do you do that? You hedge the heck out of it. Okay. Now, if you're smart, you only hedge when you need to, and you enjoy the upside when you can, right? Meaning, let's say the deal is in Brazilian real. So if the dollar falls, it's going to cost you more money. So you would want to hedge that. So you want to make money in the foreign exchange market as a hedger now, selling dollar, because you don't want to pay more dollars. So you have the same thing in Brazil, right? But what if the dollar gets strong relative to the Brazilian currency? Well, you're doing deals in the Brazilian currency, the real. So suddenly, real is cheaper for you. And you're like, yeah, this is good. Stop hedging. Right? And all of a sudden, your dollar buys more and more of that local currency. It's getting cheaper and cheaper and cheaper in dollar terms. And you're like, yeah, this is good. Now, most hedge funds are just dumb. They just lock in today's price. That's that. And if the market goes in your favor, it doesn't matter. You're hedged and now you lose money, but it keeps you locked in at that original price. It's not dynamic. It's just that day's price is locked in now forever. And when it worked for you, you're making money right on the downside, which offsets your loss in cash. But your money in the market is making money to offset your losses, right? Futures and cash is how it goes. But the other way around, when you're making money, you're losing money on your hedge now. So you didn't make any money in the futures market, but you made money in the cash market. But there's your losses again are offset by the wins, and you're still locked in that original price. Wouldn't it be better to hedge only when you thought the dollar was going to lose value, and then stop hedging when you thought the dollar was going to increase in value? Yeah, but that means you have to do your homework and have to be smart. And most people are just lazy, and they're like, yeah, we'll hedge you. How much is it? $1 billion? All right, well, we'll use leverage. So, right, give us uh, give us 20 million, and we'll just hedge the heck out of you. Charge you a management fee, and we'll do nothing. We'll just sell today, and we'll do nothing the rest of the 3 years of the contract, and you will pay us 1%. I know a guy that has a staff of 12 employees in Switzerland, and all they do is hedge his deals. That's it. So he calls up like, yeah, we're doing something in Poland. They're like, how much? 270 million zloty. All right, we'll hedge it by tomorrow. We'll have the hedge on by tomorrow. That's it. Is that funny? That's a job. Yeah. We got a zloty deal here. All right. Well, we'll hedge that for you. Hedge the zloty. You guys trade the zloty? All right. So let's look at gold. You don't trade Polish zloty, Charles? Oy vey. Yeah, I don't think TradersWay even has it. Yeah. Can't even spell it. Yeah, that's funny. Um, well, one thought, guys, if you want a career in a bank, for example, as a Forex trader, do you think you're going to walk in and start trading Euro USD? They're like, oh, great, here's $1 billion, have at it. By the way, we love the fact that you don't do fundamental analysis at all. You have no idea what's going on in the government and fiscal policy or potential changes to the fiscal policy. We love the fact that you just stare at a 5 minute chart and make up decisions on the fly. It's really cool, man. We love it. Here's $1 billion. Have at it. Look out for that 15-minute 5A cross. Woohoo! Did you see that stochastic at MACD? Uh-oh. Right? Yeah. Oh my God, you just blew our mind there. You're totally in. All right. So realistically, what would happen if you were qualified? You could talk intelligently about the markets, fundamentally and technically, monetarily and fiscally. No, but where would you likely fit? In a big bank with thousands of employees? Usually in like emerging markets or doing support on the trading desk, right? No, but like, no, as a trader. No, probably some emerging market, right? You want to specialize in Latin America, you want to specialize in Africa, you want to specialize in Eastern Europe, right? So, for example, you could just totally focus, let's say you really wanted to work at a bank, you could say, well, one of the things you want to do besides learning how to trade profitably and technical and fundamental analysis, which you should, but you should say, well, I'm also going to play around with the idea that my first job will be working Eastern Europe for a big bank because nobody wants to work Eastern Europe. They want the bigger money, right? But you got to start somewhere. So you're like, all right, Hungary, Czech Republic, Poland, bare minimum, right? Right? The three kings of Eastern Europe. Probably throw in some lira for good, for good measure, right? And they say, well, thank you for your application. We're really impressed that you know McDonell. That's really great. So tell us, how do you envision working with our great, glorious bank, right? And you can say, well, I know this, I know this, I know this, but guess what? I have at least 3 years focused on Poland, Hungary, Czech Republic, and Turkey. And I know everything there is to know about the central banks. I know everything there is to know about what's going on in government. I may not speak Hungarian, right? But I speak money, love and money. I speak love and I speak money. Okay. Do you see what I mean? So you be interesting if you thought you were going to be a bank trader that you start that process now. And whatever you do, right? For Pete's sake, do not mention Iraqi dinar. Don't even say it, right? They'll invite you up to the roof to show you the beautiful, beautiful view. Then when you're not looking, they'll push you off and you'll hear their laughter before you hit the ground. Like another dinar guy. Yeah, look at that guy, dinar. I got your dinar here, huh, boy? I got your dinar right here, huh? Oh, must have tripped. Oh, it's amazing. It's amazing what people will say. So, anyways, specialize is one angle of attack. And by the way, if you want to start a hedge fund one day, having worked for a top-notch bank, even if you're like a janitor, you can say, "Oh, well, I was an engineer, custodial engineer at J.P. Morgan." Right? You fix, you clean toilets and you fix the ATM machine. Doesn't matter. Boom, J.P. Morgan, right? Cayman Islands. You're so funny, Deej. You need to do some research, bro. Um, but yeah, so I don't know where I'm going. Oh yeah, so work for a bank for a couple of years. Just say, well, before starting the hedge fund and really refining my strategy, I worked the emerging market desks, in particular Eastern Europe, but I around with LA, right, Latin America, and got a great global perspective from the trading desk there. But really, what I see are the giant big banks, even with all their resources and the amazing amount of brains and talented people they recruit from all the best schools. Even with all those resources, they're a little bit slow, a little bit cumbersome, way overregulated, and just don't have the freedom to be able to provide the services and the focus that you need, sir, with all your money that you should give to me to trade. You see what I mean? So let me tell you the three things what I learned by trading on that desk, why it's not appropriate for you, even though on paper it makes sense. And then I'll give you three reasons or three, I'll show you three different strategies that I can carry out for you that I think makes total sense for your portfolio. I will kick butt for you. But this $10 million, that's nonsense. I will not even think about it unless it's 12.5. Okay, so anyways, put that together, put it as a thought process. All right, gold. All right. Um, Sorry, I realize I babbled on there. Yeah, I need to sleep. Sorry, sorry, losing my mind. So yeah, what do you want to do with the Goldie, huh? Kind of feels top-ish. I think I have analysis on it somewhere else, and of course it might prove me wrong, but let's look at it anyways. All right, let's clean this up. Let's take a look at what we had here. Oh, yeah, okay. Look, nice analysis, Wayne. So I understand what I said, which is great. Okay. If you are a bear, you may consider this, right? And what else? Where is it? Why can't I see it now? I guess it's here. Okay. And specifically what we talked about earlier, it might have just been yesterday, this line right here. Okay. Okay. R1. Seems like it's also 382 of something. But if you're a bear, you can only sell at resistance, right? So R1 near this would be an area you would look for a drop, right? And if this held, and you can see you might have been able to short, if this did hold, and somewhere in here you might have shorted, then we're heading down to what? S1. Okay. Now, what is this about? Let me change this template. This right here states if you're a bull on gold, right? But this whole area here is a buy zone. And it's all preempted by one of the two counter trend trades. Okay? Which means if you are a bull or you became a bull because of this or this, right? Here's the open, right? How do you trade it? Buy the dip, buy the breakout, okay? Then you hit the target. Well, okay, that's tricky. But at some point, you know, and the projection or the prediction here is if you're buying in this yellow zone, the red zone up here is your target, right? So the only debate here, as anywhere, is whether you're a bull or a bear. If you were a bull, there is no doubt you could have bought this and made money. If you were a bear, there is a chance you sold this and lost money, or even sold it and made money, or never got your entry. You see what I mean? Yeah, I got it. Unemployment 246, the average 248. So on average, so put this together in your model. Okay, put this in your model that initial jobless claims as expected, let's say average, good, good, but average, not better than expected, as expected. So everyone that uses that in their model is all going to have the same number. And then ADP was smoking hot, right? Did you see companies with less than 100 no, less than 50 employees? So this is like your garages and convenience stores, and small, your average little company, right? Family offices and stuff. They added 60,000 jobs last month, and your medium term ones, right? Companies up to what is it, 250 employees? They added a whole bunch of jobs too, and factories hired, and construction companies hired. So really smoking hot ADP, which is really the base of the economy. Most people don't work in a company with 5,000 employees. Most people work in a company with 20 employees, right? So, anyways, ADP was smoking hot, but on the big, initial jobless claims, average, which is good. Now, do we just look at this week's average or this week's number? No, what we look at is the trend, right? So do you remember not long ago the 4-week average was like 256? Now it's 246. That's pretty good. Okay. So if you're building a model for NFP is what I'm talking about, if I wasn't clear on that. You can go here if you want. Hang on. No, I don't want to open. You can't open the video. What video? Stupid. Why is this browser doing this? That's what I'm trying to get to. 'Cause, 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 You guys actually read these, right? So we were here. Let's not do that one. Let's do this one. We were here. Okay. And now we're here. So we went from 280, 280,000 to 200 less than 250,000. Oh, did you lose it? Wait, hang on. Did that work? What? Stop sharing. Click that. Stop that. Click this again. It's all bombed out. It bombed out. There's something stupid with the browser. All right, so let's do it this way. Oh, let me say my goodbyes. Goodbye, everybody. Sorry I was so tired. Need to sleep more. Need to work less. Who cares about my needs? I got a wife and two beautiful children to take care of. Who cares about me? So, peace on earth. May the pips be with you. May your profits be above average. I'll see you tomorrow at non-farm payrolls. Cool. Cool. Yeah, it's going to be great, huh? You good? Yeah. Well, anyways, again, I apologize for being less than stellar, but hey, us humans do that from time to time, right? But you got everything I had. So I'll see you tomorrow at non-farm payrolls. Thank you for everything. Thank you for being a client at Traders Way. And if you're not a client at Traders Way, shame, shame, shame. Don't be a lurker. Open up an account today, would you please? Thank you.